Right now, Ondas Holdings, ticker ONDS, is trading at $7.81, which is up a staggering $1.25 or 19.06% just today. And the immediate reaction, the expectation for a stock this volatile, is to assume it's just a low-float anomaly, a technical bounce, or perhaps a fleeting headline that will evaporate by closing bell. Many traders, especially those accustomed to the quick flip environment of Robinhood stock trading, might see this 19% pop and immediately think about taking profits, assuming the move is already over. The common belief is that small-cap tech, especially in a field as crowded as autonomous systems, is all just noise and speculation. But the reality of what is happening under the hood at Ondas is vastly different, and it suggests this 19% move isn't the end of the story. It's the market just starting to read the first page of a completely new chapter. This isn't a technical bounce, it's a fundamental repricing. The numbers that came out yesterday in their third quarter 2025 earnings report are, to put it bluntly, almost hard to believe. And they paint a picture of a company that is worlds apart from the one the market was pricing just 48 hours ago. The expectation was that Ondas would continue its slow, cash-burning grind. The reality, confirmed by their Q3 results, is record consolidated revenue of $10.1 million. That's not a small beat. That is a more than six-fold increase, a 580% surge year over year. And this wasn't driven by some one-time accounting trick. This was propelled almost entirely by its Ondas Autonomous Systems, or OAS business unit, which contributed $10 million of that total. This is the segment the market has been watching, the one responsible for the Airobotics and Iron Drone platforms, and it is finally delivering in a massive way. This surge in revenue is forcing everyone, from the self-investing individual using a SoFi Invest account to the institutional desks at major funds, to completely reevaluate their models. What was once a pre-revenue concept is now a $10 million a quarter operation that is growing exponentially. And management didn't stop there. They didn't just beat the quarter, they fundamentally altered the future outlook. Ondas raised its full-year 2025 revenue guidance to at least $36 million. Think about that. They just posted $10.1 million, and they are telling the market to expect more than $15 million in the fourth quarter just to meet the low end of that new target. But even that pales in comparison to the bombshell they dropped next. Management established a preliminary 2026 revenue target of at least $110 million. This is the kind of forward-looking statement that separates high-growth tech from speculative stories. A company can't, or at least shouldn't, put a number like $110 million out into the public sphere unless it has a high degree of confidence in its backlog and pipeline. This completely reframes the entire investment thesis. We are no longer talking about a small company hoping to catch a contract. We are talking about a management team mapping out a clear path to a nine-figure revenue stream. This changes the valuation calculation entirely. It's the kind of long-term visibility that institutional investors, the ones using complex Fidelity trading platform tools or managing Fidelity wealth management accounts, crave. It's no longer just a story stock, it's a growth stock. This is why you're seeing the 19% jump today. It's the sound of algorithms and analysts scrambling to update their spreadsheets, realizing the company they thought was worth $5 is now showing a clear line of sight to revenue numbers that could justify 10, 15, or even more, assuming they execute. Now let's address the other side of this, the part that separates a professional analysis from hype. How is this possible? Where is this growth coming from, and what are the risks? The growth is coming from defense and security. The Iron Drone Raider counter-drone system and the Optimus drone-in-a-box are clearly finding a market in a world that is waking up to the threats of autonomous aerial systems. The company has been on an acquisition spree, snapping up Apiro Motion for ground robotics, SPO for advanced optics, and Centrix for counter-drone cyber technology. They are building a system of systems, an integrated platform that can offer layered defense and autonomous solutions. This is a smart strategic move, turning them from a simple product seller into a platform provider, which commands much higher margins and stickier customers. However, the 10Q filing reveals the big risk, the reality that must temper the expectation. In the third quarter, one single customer, a customer in Israel, accounted for 90% of all revenue, or $9.36 million. This is the definition of customer concentration. It's a massive, glaring red flag. If anything happens to that relationship, that single contract, the $110 million 2026 target suddenly looks incredibly fragile. This is the tension at the heart of the Ondas story right now. But this is where the other side of the earnings report comes in, and it's arguably just as important as the revenue. Ondas has raised an astonishing amount of capital. Through a series of equity offerings in 2025, the company has raised approximately $855 million. Their pro forma cash balance is, for a company this size, astronomical. We're talking about a cash and equivalents balance of over $430 million as of September 30th. This is an incredible war chest. So while the 90% customer concentration is a huge risk, the company now has hundreds of millions of dollars to solve that problem. They can use that cash to fund their M&A strategy, to acquire companies that bring in new, diversified customer lists. They can afford to rapidly scale up sales and marketing in new regions. They can outspend, outmarket, and outdevelop their smaller, cash-starved competitors. This isn't a company worried about making payroll. This is a company deciding which of its dozen growth opportunities to fund first. This cash raise also points to the bear case: dilution. The company's share count has ballooned, but the market's reaction today, this 19% surge, is a clear sign that, for now, investors believe the potential for $110 million in revenue far outweighs the pain of the past dilution. They see the $855 million not as dilution, but as rocket fuel. When you look at the trading volume, it tells the same story. This isn't a few retail traders on the Robinhood app chasing a headline. The volume is heavy, and it's been sustained since the report dropped. This indicates institutional activity. And when you look at the 13F filings from the last few quarters, you see this trend was already beginning. The number of institutional owners has been climbing. Fintel reports over 150 institutional owners now, a massive jump from the previous quarter. Big names like Vanguard, BlackRock, and JP Morgan have been building positions. These aren't funds that typically gamble on pre-revenue drone companies. They are the types of managers behind Fidelity ETFs and major Fidelity mutual funds. Their presence suggests their own due diligence saw this operational inflection point coming. They weren't buying the story, they were buying the system of systems defense tech roll-up strategy. They were buying the backlog, which stood at $22.2 million at the end of the quarter. This is the reality that is now pulling the stock price up to meet it. The expectation that Ondas was a retail play is colliding with the reality that it's rapidly becoming an institutional growth story. And the 19% move is the shockwave from that collision. So, what does Ondas Holdings actually do? For those new to the name, it's really two companies in one. There's Ondas Networks, the legacy business, which develops private wireless data networks for mission-critical industrial markets, most notably the North American railroads, through a key partnership with Siemens. This is a solid, long-cycle business. But the growth, the excitement, and the entire reason for this 19% move is the Ondas Autonomous Systems unit. This division, built through the acquisitions of American Robotics, Airobotics, and now Iron Drone, Apiro, and others, is focused on the future of autonomy. It provides autonomous drone-in-a-box solutions, the Optimus system for industrial security and data capture, and critically, counter-drone interception systems, the Iron Drone Raider. This is the part of the business that is squarely in the middle of the global defense and security spending boom. They are selling the picks and shovels and the shields for a new age of robotic systems. It's a much